Hey, good morning. Let's go over today's trade plan. So we had a fairly balanced overnight session with the buy side a little bit more dominant here. Heading into the open, we have the aggressive area of support at 85 to 86, and holding above that zone would tell us that the buyers are continuing to be dominant, and if we continue to hold above 85, 86, it could lead to a breakout above 91 to 93. But 91 to 93 is going to be resistance until broken. On the downside, we have support 80.75 to 82.75, and ideally, if the buyers are going to maintain control, we want to see the market holding above that area. And a break below 80.75 to 82.75 would tell us that the sellers are now gaining dominance, and from there we can go down and test the 75 half high volume node, and 71 to 73 would be the next important inflection point. So we know the market has been quite balanced over the last 2 to 3 sessions, and it is setting up for a directional move. And it's only a matter of time before it actually breaks this range from 71.73 on the downside, 91.93 on the upside. So far it's been very balanced within that range, and like I said, it's only a matter of time before we actually get a directional move outside of that range, or at least get a break of that range. So as long as the market's holding above 85, 86, we will give a little bit more edge to the buy side unless we're seeing some very clear signs of weakness, because the market is balanced until it actually breaks either 91.93 or 71.73. On the smaller time frame, 80.75 to 82.75 is the area that would need to be broken in order for the sellers to at least show that they are now gaining some dominance on the smaller time frames. So in the event of an upside move and a breakout above 91 to 93, we can quite easily test 96 half to 98 half. And if the market is breaking out on strong momentum, then 96 half to 98 half is a better area to take profit rather than fade the market and go short. So we'll have to be cautious fading 96 half to 98 half. And beyond that, the market can hit 2101.75. That's an area where it's higher odds of sellers perhaps stepping in. And then, of course, we have the resistance at 2103 quarter, 2105 quarter, which marks the recent high as well as the all-time high. On the downside, below 80.75 to 82.75, we can quite easily test 75 half, the high volume node, and 71.73 would be the area where buyers could still defend and step in. In the event of a break below 71 to 73, 64 to 66 half and 57 half to 59 half would come into play, and the 64 to 66 half is a larger time frame area of support. So as long as the market hasn't balanced for too long ahead of it, and as long as we are not in a very high momentum breakdown type day, then that's still a spot where buyers can defend, because the larger time frame bias is still bullish. So when you're in a overall bullish environment, responsive buyers can pretty much be active at every larger time frame area of support. So 64 to 66 half, 57 half to 59 half, those are still areas where we can expect responsive buyers to be active. So that's really the context heading into the open. The market is in a very balanced state, and it can tip one way or the other. And if it goes directional, then it's going to be better to trade in the direction of the break, in the direction of that short-term directional conviction, rather than looking to fade the move. So how the market resolves outside of initial support and initial resistance is really going to set the tone on the smaller time frames, and then how the market reacts at 71, 73 will be another indication. But short term, heading into the open, initial support and initial resistance, pretty much the overnight range, is really going to determine which side is in control, which side is more dominant. Now, in order to get a breakout to the upside, we are going to have to see broad market strength. We are going to have to see sustained upside momentum. So we are going to look for those signs. And of course, if we're holding above 85, 86, then from a price action perspective, it tells you that the buyers are still dominant. But just keep in mind that 85, 86 is a relatively aggressive area of support. So That's exactly why holding above it tells us that buyers are dominant. But from a location perspective, it is a relatively aggressive area of support. So we'll keep an eye on pre-market support, initial resistance, see how the market's behaving over there. Check out the underlying internals, the momentum situation, because like I said, we are going to have to see that upside momentum in order to get a breakout. And if there's simply a lack of momentum at initial resistance and a lack of upside strength, then we can continue to just balance within a range. So those are the main thoughts and ideas heading into the open. Let's see how the market behaves here. Let's see if the buyers can really maintain the short-term control that we've seen here so far on the smaller time frames, and we'll take it from there.